will show you the exact strategy I will be using and what I've been using to get 3 funded accounts already. So pay close attention. Lots of sauce here. ICT strategy with a risk-to-reward principle, and my probability principle. Let's focus here on NQ on the hourly time frame. We have equal lows, aka liquidity. Most average traders would see this as a direct place to buy and placing their sell stops below. We look for those sell stops to be breached. Think of that one GTA mission. Once we swept liquidity, we wait patiently for our AAA plus setup before I tell you what the AAA plus setup is. Let me briefly describe what is a liquidity sweep. Banks and institutions see what retail see, and they need to unload hundreds of millions of shares, but they can't put that money in the market at once because odds are against them. For an equal buyer or seller on the other side, remember, for every transaction, there is an opposite reaction on the opposite sell. For every buy, there is an equal sell. Yin and yang. So they need to unload that large sum of money in fragrances using retail stops as the opportunity. Pretty genius on their part. Anyways, back to the AAA plus setup. Once we consolidate, we look for a 1-minute break of structure of a previous lower high or lower low. Once we get that, that is already a AA plus setup. But I trade conservative, so I need that third probable factor in my favor for max confluence. And that thing is a fair value gap, an imbalance zone. In this scenario, it was created on the 2 minutes frame. Once we tap it, we enter with our stop below of range. Then we have a 1-to-4 risk to reward and bam, trade hit. I hope you get the general idea of how I trade.